Well, holy smokers, guys, the internet has went wild. Alibaba is crazy right now, crazy hot topic here on YouTube. Everyone who has to do with anything investor related has to do a video on Baba. It's just kind of a trend right now, and I'm jumping in because I hear a lot of things getting only seen from one side and not really from the other. So I want to point light to this dark side of Baba stock, because people are trash talking this stock. They're talking about the great value first of all, but then they come with a big harsh truth, and that is that when you are owning Alibaba on the New York Stock Exchange, well, then you don't own the shares, and then if the company goes bankrupt, then you don't get any compensation, and there's blah blah blah. And I say, first of all, you can start buying it on the Hong Kong Stock Exchange, because most Americans, I don't think they've ever bought a stock outside of America, so they think that is woo, that's too big of a deal for them, and they are really getting scared in this stock. So yeah, let's address this, guys, because it's not a problem buying on the Hong Kong Stock Exchange. The only problem with this is that there's some funds that has some strict rules that they're only going to invest in American companies traded on the New York Stock Exchange, something like that. That will lose a bit of course, the share price will be impacted by that, but it will not impact the company in any way. If it were to be delisted, so a couple funds would pull out, and if people really believed in the company and the value of the company, well, if it was pulled from the New York Stock Exchange, why don't just buy it at a lower price on the Hong Kong Stock Exchange? I really think people are really shitting themselves right now, and today we'll look at the true value of this company, and I'll talk about why it's so much more value than Amazon, much more than you think. It's not just because it's a Chinese company and everything is cheaper in China and this and that. There's some huge advantages to Baba, and today we'll get into that, because I will never in my right mind buy Amazon stock. I will not do that as long as Baba is on the market. So let's switch over here and let's get this party started. So here we have a snowflake, as it's called. It's on Simply Wall Street, an analyzing program which 50 plus analysts have created this. So it's basically all the data just rolled out for you to consume. And here we can see this is my favorite, absolute favorite shape when it comes to a snowflake, which is basically you can quickly get a view of what is going on. So we have a nice big chunk here in the future growth, which means that is really something. That's of course the analysts' projected growth for the company. So that is really one of my favorites. That has to be at least 3 checked for me, and that is checked. We have the value, and that is also one of the best things. You don't want to buy a company to a bad value, to a bad price. You don't go down and buy a sausage to 3x the price. That is not gonna happen. That is kind of how I look at it. Really bad. Yeah, okay, let's just move on and pretend that never happened. Dividend, I really love when a company does not pay me dividends. I like them to just keep that, and yeah, just do whatever the beep you want with it, and don't give any of it to me. I don't want it. I don't want to pay my taxes on it. I don't want any of that. If you want a dividend stock, then buy the goddamn dividend stock. Come on, don't buy this company at least. Financial health, we'll get to this in a minute. This is the craziest financial health I've ever seen in the company. And the past, I don't really care about the past. I only care about this one, the future. So let's go down to valuation, because this is where things get heated. In my opinion, this stock is a 3 to 5 to 6x in the next 10 years. This stock can do so incredibly crazy things, and when you look at it, it's actually not crazy, right? Because it has a 20 price to earnings ratio, and the industry average, which has to be said, that is also the US retail, and you have to keep in mind that is it's a Chinese company, so really it should have been the Chinese online retail industry average that they should have compared that to, which would be even lower. So already there you start kind of wondering how good value is this. And really, I think this website didn't take everything into consideration, because this is simply, yeah, it's more undervalued than that, I can tell you that. So, all these ratios that I don't really like. Financial health, God has spoken, okay? This is absolutely crazy. I've never seen a company with that much, yeah. So first of all, long term, we are looking smooth, guys. We are looking just insanely great right here. You can see they have a fourth of the liabilities as they have the assets, which means that for the long term, right, they have a crazy amount of capital compared to their expenses, the debt, all these things. We'll also get to see the debt is completely out of it's bloated, as I like to call it. The liabilities in the short term also covers it pretty much double, and the short term also covers the long term liabilities. So checks everything right here. The debt to equity ratio, guys, has been decreasing. Look at this. These two lines have been just tearing apart with a debt to equity ratio of 13. That is definitely considered low, and they are also reducing it. You can see reducing from 30 to 13. That is a significant reduction, I've got to say that. So yeah, the dividends, we have talked about it. I hate dividends, so don't really want to spend too much time on that. Here's where it gets interesting as well. So the management team, really great. Baba's management team is seasoned, well seasoned, a little bit of salt and pepper, and experienced, and yeah, they have almost 6 years of average tenure. Board of directors also considered experienced and tenured, and everything is just nice. SoftBank Group Corp, probably some kind of Chinese, a big superpower thingy. They own a fourth of the company. That is something, guys. And the top 25 shareholders own almost 50% of the company. So I really don't like this huge position right there. But yeah, whatever. They have a huge great company here. So why would they sell? Here they have 250,000 employees, guys. Are you flipping my flapjacks? Okay, let's get into this one here. Statistics, guys, very important. And now I want to compare it to Amazon. So it might get a little bit hard to follow some of the things that I say now, but you'll just have to stick with me, because it's very important to know some of these different kinds of metrics if you don't know them already. Probably do if you're a long-term viewer, as I like to call it. So if you want to be a long-term viewer, become that, subscribe. Go and do that right now while I take a deep breath and rest my voice. Then you can just go down and click that button, and well, here we are. First of all, the market capitalization of Baba is $500 billion. And we have an enterprise value, which comes in handy later here with some of these ratios. Enterprise value is the debt, the equity plus the cash plus the debt. So basically all the infrastructure that the company has, that they've paid for, all of that, summed up with all the money they have on the balance sheet, and then you minus that debt. So the debt that they have, and the debt is, as you saw, not that much. So we have an enterprise value of $3 billion. This is the true value of the company. This is if you were to just sell the whole company to on an auction, you'd get that. But the stock market has priced it a little bit differently. The trailing PE 21, looking good, and I want to compare that to the PE over here, because then we can really start to see some. Yeah, it's 3x the PE ratio over here compared to the Baba. Forward PE is really, Amazon 52, Baba 2.4. Price to earnings, I don't know if you know what that is, but if you don't, well, here it goes. Price to earnings is how many times how many years it would take the earnings to make up the market capitalization. So obviously it would take some 21 years for it at this moment in time to make up these $500 billion right here. But if you take a look into the future of the estimates of the analysts have made these estimates. Take a look at them in the just a moment, and based on those estimates, if those are becoming reality, well then the PE ratio in like 3-5 years will be 3. So obviously the price has to go up, and that is kind of what you can gain from that. Price has to go up, and that is probably why you want to buy it at this point in time. And the price to sales ratio is also insanely low on this company. It's basically the revenue, how many years it would take the revenue to make up the market cap, and as we can see, it's 0.6, because if we take a look at the financials here, we have this market cap of 470 billion, and we go into the financial, and this year they have made 769 billion dollars. Guys, this means that they are basically making up their market cap in revenue pretty much 2 times a year. And this is crazy. The price to book ratio, not that important for me. The enterprise value to revenue, guys. All these ratios have been the market cap, which is the value of the company determined by the stock market, because it is all of the shares times the share price. The number of outstanding shares, all the shares in the whole company times the share price, which makes whatever that makes the market capitalization. That price is set by the market. This price is set by the fact by how much they have on their hands, and how much debt they have, and how much equity they have invested in whatever cars and manufacturing halls and everything that they have. So enterprise value to revenue gets even crazier. It's basically the sales ratio. We could the sales is also just the revenue. So enterprise value is basically, instead of comparing the market cap, you compare the enterprise value. So enterprise value to revenue 0.38. Obviously the enterprise value is lower, so these ratios will be a little bit lower. And revenue is, you know what revenue is, but EBITDA is earnings before interest and taxes. You haven't taken the taxes out, because that varies from country to country. You haven't taken the interest out of there, because that also varies from loan to loan, from situation. So you have kind of cut some things out. You have obviously cut the cost of goods out. So you have the gross profit. It's kind of a refined revenue, as I like to call it, and it's not pure profit. And we have here to the enterprise value almost 2. I want to compare that. So remember this 0.3, 0.4, let's just say, and 2. What is here? We had 0.3. Here we have 4. 4 years, guys, for the revenue to make up for the enterprise value. Enterprise value, we have 30. This is getting this is getting kind of insane. 30 compared to the 2 right here. You sometimes you just have to get the better deal, and you can't. I really love Bezos. I really don't, but I can't stand this value, guys. I can't. It's too much temptation to just put it to say it shortly. This is great value, and the only risk here is this risk that is really you probably don't want to dedicate your whole investment portfolio to this one stock, because there's a tiny risk. But at the end of the day, it's only a risk because some of these funds will probably sell out of their positions, and some crazy madmen will also do that. So that is the only risk with it, and you can say a lot of things about this company, but it's just incredible the amount of value you get. And you can see the revenue estimates this current quarter. We have the current, the next quarter, current year, low estimate We have to see average estimate right there. 920 billion, and we're going to bump up next year, 2023, to 1.11 trillion. Guys, yeah. Here's my plan. I'm buying this on the Hong Kong Stock Exchange, and I'm buying this and I'm holding it like also all of the good old value investors. We talking, I don't know what he's called. Yeah, the guy I don't know what is called. We have Charlie Munger. We have Warren Buffett. We have Ray Dalio, I think, also bought some. I don't know. Pretty much every single wealthy hedge fund manager who has some interest in value has bought some of the stock, and that just kind of, yeah, they really see past this, and it's really the average consumer who really gets caught up in the details with this New York listing. And I think it's only if things kind of escalate between America and China, obviously. Yeah, there's a bit of things going going on with the company. Jack Ma kind of going on a run on something. I don't know what he was on there, some kind of drug, but yeah. So there is obviously Jack Ma. There's some incident with some men getting a little handy with their little fingers on some ladies, and a lot of things have kind of went south for the company, but that doesn't change the value of the stock of the company. With that said, have a great rest of your day. Peace out and subscribe. Would really appreciate it. Bye.